The Weyerhaeuser stock I shared with you went from $15 to $26. That's a 73% gain, and made subscribers serious money on a stable, established company. Today, I'm bringing you something completely different. 3 penny stocks under $1 that could deliver even bigger returns. Before you think this is penny stock nonsense, these companies have real operations, real revenue potential, and real catalysts that Wall Street is completely ignoring. When stocks are trading for pennies, even small movements create life-changing percentage gains. Let's find out which ones could be your next 500% winner. Welcome back to Velocity Stocks. I'm Sterling, and this channel is built on one mission: finding undervalued stocks before Wall Street catches on. Whether it's blue chips or penny stocks, we focus on real catalysts, not hype. Hit that subscribe button right now and smash the notification bell. I release new stock picks every week, and you don't want to miss the next opportunity when these stocks start moving. Today we're covering 3 penny stocks under $1. Let's dive into these opportunities. Here's why penny stocks under $1 are generating massive interest right now. When you buy a stock at 10 cents and it moves to 50 cents, that's a 400% return. The same dollar amount on a $100 stock would barely move the needle. Now, before you think this is all about gambling on junk companies, let me be clear. The 3 stocks I'm covering today are not empty shell companies. They operate in high-growth sectors: pharmaceuticals, finance technology, and international markets. They have employees, they have operations, and most importantly, they have catalysts. Yes, these are risky. Penny stocks are volatile. But here's why they're different. They're trading on major exchanges like Nasdaq, not sketchy pink sheets. They have real business models, and they're so beaten down that the risk-to-reward ratio is absolutely compelling for those willing to take calculated, speculative positions. Let's get into the picks. Stock number 1, China SXT Pharmaceuticals Inc., ticker symbol SXTC, trading on Nasdaq. Current price, just 9 cents per share. Yes, you read that right, 9 cents. SXTC is a pharmaceutical company founded in 2005, employing 75 people, specializing in traditional Chinese medicine and modern pharmaceutical production. They manufacture and distribute healthcare products across China's massive healthcare market. Here's the catalyst that makes this interesting. China's pharmaceutical market is exploding. We're talking about a $175 billion industry growing at 8% annually. SXTC is positioned in both traditional medicine, which is culturally dominant in China, and modern pharmaceuticals. Now let's talk about the numbers that will blow your mind. SXTC hit an all-time high of $100 back in February 2023, from today's price of 9 cents. That represents a 111,000% move. Now, am I saying it'll go back to $100? Absolutely not. But even a move to $1, which is just recovering $2 status, would be an 11x return from here. Recent price action: over the past 6 months, SXTC has ranged between 9 cents and $2. Just 2 months ago, this stock was trading at $2. That's a 2,122% gain from current levels. The stock has been severely beaten down, likely due to broader market concerns about Chinese stocks and regulatory fears. Market cap, just $12 million. This company is being valued at almost nothing. If they secure new distribution agreements or expand their product line, this market cap could easily 5x 10x. Average volume, 16 million shares daily. That's excellent liquidity for a penny stock. You can get in and out without being trapped. Why this could explode: Chinese healthcare spending is accelerating as the population ages. SXTC's dual focus on traditional and modern medicine gives them unique market positioning. At 9 cents, this is pure speculation, but the asymmetric upside is undeniable. A recovery to even 50 cents would be a 455% gain. Stock number 2, SafeXai Corporation, ticker symbol SAFX, also trading on Nasdaq. Current price, 24 cents per share. SafeXai, formerly XCF Global Inc., is a financial technology company founded in 2016 and headquartered in Houston, Texas, with just 8 employees. This is a lean, agile operation focused on AI-powered safety and compliance solutions for the financial sector. What makes SAFX different from stock number 1? This is an American company operating in the red-hot intersection of artificial intelligence and financial compliance. RegTech, regulatory technology, is a massive growth sector as financial institutions face increasing compliance burdens. The catalyst: SAFX is developing AI-driven compliance monitoring systems that help financial institutions detect fraud, money laundering, and regulatory violations in real time. With global financial crime estimated at $3.1 trillion annually, the demand for automated compliance solutions is exploding. All-time high analysis: SAFX hit $22 per share just in June 2025, less than a year ago. From today's price of 24 cents, that's a 9,066% move. This stock has been absolutely destroyed in recent months, creating a potential bottom fishing opportunity. Recent price action: 1 month high low is 29 cents to 14 cents. 6 months, $1.73 to 14 cents. 1 year, $22 to 14 cents. This has been a brutal decline, but it also means anyone who buys now is getting in near the absolute bottom. Market cap, $48 million. For a company in the AI compliance space, this is ridiculously undervalued. Comparable companies in RegTech are valued at hundreds of millions. Average volume, 10 million shares daily. Decent liquidity for entry and exit. Why this could explode? AI is the hottest sector in the market. Financial compliance is mandatory, not optional. If SAFX secures partnerships with banks or fintech platforms, this stock could easily 1x back toward $2, $5. At 24 cents, you're buying a lottery ticket with a business model attached. Stock number 3, X3 Holdings, Co-Limited, ticker symbol, XTKG, trading on Nasdaq, current price, 52 cents per share. This is the highest priced of our 3 picks today, but still well under $1. X3 Holdings is a financial services company founded in 1997, employing 133 people. They provide asset management, wealth advisory, and financial consulting services, primarily focused on cross-border investment between China and international markets. What makes XTKG unique? This is my diversification play. While stock number 1 is Pharmaceuticals and stock number 2 is AI Fintech, XTKG is a traditional financial services business with nearly 3 decades of operating history. They're not a startup, they're an established player that's been crushed by market conditions. The catalyst: cross-border investment between China and the West is reopening after years of restrictions. Wealthy Chinese investors want access to U.S. markets, and Western investors want exposure to Chinese growth. X3 Holdings facilitates these transactions. As geopolitical tensions ease and capital flows resume, companies like XTKG are direct beneficiaries. All-time high, $14.50 just in August 2025, less than 6 months ago. From today's price of 52 cents, that's a 2,688% return potential just to retest recent highs. Recent price action, 1-month range, is 52 cents to 14 cents, 6-month range, $14.50 to 14 cents. This stock collapsed from $14.50 to 14 cents in under 6 months. That's a 99% drawdown. We're now at 52 cents, which is a 271% recovery from the absolute lows, but still 96% below recent highs. Market cap, just $8 million. For a company with 133 employees and nearly 30 years of operational history, this valuation is absurd. They're being priced like they're going bankrupt tomorrow. Average volume, 23 million shares, the highest of our 3 stocks. Excellent liquidity. Why this could explode? This is my personal highest risk, highest reward pick. If China-US financial relations normalize, if wealthy investor demand returns, if X3 can leverage their established infrastructure, this stock could easily 10x 20x back toward $5, $10 at 52 cents. You're buying a beaten-down financial services firm for less than the value of their office furniture. Let's compare all 3 quickly. Stock number 1, SXTC, at 9 cents. The deepest value play. Pharmaceutical exposure to China's healthcare boom. Highest percentage upside potential if it recovers to even 50 cents. Most speculative stock number 2, SAFX, at 24 cents. The AI RegTech angle. American company, cutting-edge technology, massive addressable market, best sector momentum with AI hype, mid-range risk. Stock number 3, XTKG, at 52 cents. The established business with real operating history. 133 employees, founded 1997. Cross-border finance catalyst. Highest price of the 3, but most stable, relatively speaking. Now for the critical risks, and UMUST understand these. All 3 of these are penny stocks under $1. That means extreme volatility. You could lose your entire investment on any single one of these. I'm talking 100% loss potential. This is not financial advice. I am not a financial advisor. Everything in this video is for educational purposes only. You must do your own research and consult with a licensed professional before investing. Position sizing is life or death important here. Never invest more than 1 to 3% of your total portfolio in any single penny stock. These are speculative lottery tickets, not retirement holdings. Do your own research. Read the SEC filings on Edgar. Understand the balance sheets, the debt levels, the cash burn rates. Check if these companies are diluting shareholders. Penny stocks can reverse split and wipe out your position overnight. These are high risk, high volatility. You need nerves of steel and the discipline to take profits when they appear. Don't fall in love with penny stocks. Alright, let's recap. 3 penny stocks under $1 with massive upside potential. SXTC 29 cents, Chinese pharmaceutical play. SAFX 24 cents, AI-powered financial compliance. XTKG 52 cents, cross-border financial services. Price targets, conservative scenario. Each stock doubles or triples. SXTC to 25 cents, SAFX to 50 cents, XTKG to $1. That's still 178% to 292% gains. Aggressive scenario. If catalysts play out, SXTC to $1, 1,011% gain. SAFX to $2, 733% gain. XTKG to $5, 861% gain. These are moonshot targets, but mathematically achievable based on recent price history. Now here's what I need from you. Smash that like button if you want more penny stock analysis. These videos take hours to research, and your likes tell YouTube to push this content to more people. Drop a comment below. Which stock do you like best? Are you Team SXTC, Team SAFX, or Team XTKG? Or are you staying away from penny stocks entirely? I read every comment. Subscribe to Velocity Stocks if you haven't already. Hit that notification bell. Next week I'm covering a small-cap biotech stock with Phase 3 trial results coming. You don't want to miss that. Check the video description for links to SEC filings and additional resources for all 3 stocks. Remember, do your research, invest with discipline, never risk money you can't afford to lose. Penny stocks are speculation, not investing. Treat them like Vegas, only bet what you're willing to lose. This is Sterling from Velocity Stocks. Let's catch these stocks in motion. I'll see you in the next video.